The crypto industry moves fast, but most projects don't survive the ride. It's estimated that around 90% of crypto projects eventually fail. But why? With so much innovation and money flowing in, what causes the majority of these ventures to crash and burn? The first big reason is lack of real use case. Many projects launch with hype and vague promises, but no clear problem they're solving. They might have fancy websites and aggressive marketing, but under the surface, there's no actual demand for their product. Without real utility, users don't stick around, and neither does value. Another major reason is poor tokenomics. A lot of projects fail because their token models are unsustainable. Either there's too much supply, too much inflation, or early insiders control most of the tokens and dump on the market. If a token has no reason to exist or can't maintain long-term demand, it usually trends to zero. Scams and rug pulls are also common. Some projects are created with the sole purpose of taking investors' money and disappearing. These are often short-lived, but they still account for a huge chunk of project failures, especially in DeFi and NFT spaces where launching a token or collection is easy and fast. Then there's team inexperience. Many teams jump into crypto with big ideas but no business or technical experience. They might not know how to build a working product, manage funding, or navigate market cycles. When things get tough, these projects often fall apart due to mismanagement or lack of execution. Hype cycles play a big role too. In bull markets, it's easy to raise money, attract users, and gain attention. But when the hype fades, only the strongest projects survive. Many tokens that skyrocketed during the bull run lose 90% or more of their value when sentiment turns. Without real fundamentals, they simply can't recover. Regulatory pressure is another factor. Some projects launch in legal grey areas, offering unregistered securities, ignoring compliance, or making promises they can't legally back up. When governments crack down, these projects often get shut down or forced to abandon their roadmap. Finally, some ideas are simply too early or too ambitious. They try to build something that needs more infrastructure, adoption, or capital than currently exists. Even with a solid concept, they can run out of time, money, or interest before reaching their goals. So, what separates the 10% that survive? Usually, it's a combination of strong leadership, clear real-world use, sustainable tokenomics, a loyal community, and the ability to adapt. Projects that focus on long-term value rather than short-term hype are the ones most likely to make it. Crypto is still a young and evolving space. It's full of opportunity, but also full of risk. Understanding why so many projects fail can help you make smarter decisions, avoid common traps, and focus on the ones actually building something that lasts.